Okay, Jay, no live.
Okay, thank you, Mike. So I'd like to welcome all councillors, officers and members of the public viewing on YouTube to this meeting of the Corporate Audit Committee. My name is Councillor Mark Elliott and I'm chair of the committee. I'll now call out the names of the other members of the committee and ask them to confirm that they are present. I know that some of them aren't, in fact, but let's start. So Councillor Andy Furs, I don't think is yet. Nope, hopefully he will come and we will note his presence when he arrives. Councillor Colin Blackburn.
Present.
Councillor Lucy Hodge. Looks like she's trying to connect but is not there. And so Councillor Brian Simmons.
Present.
And co-opted member John Barker. Who is looking for his mute button.
Sorry, I'm muted. There we are. Present.
Thank you very much. Also present are the Democratic Services Officer, Emphas Hughes, and other officers who will introduce the reports as we make our way through the agenda. The council has agreed to a protocol to cover virtual meetings, and this meeting will operate in line with that protocol in accordance with the Coronavirus Regulations 2020. The meeting has the same status and validity as a meeting held in the Guildhall. Can I remind members and officers to keep background noise to a minimum, to only speak one person at a time and not to speak over others. Please mute your microphones when not speaking and then unmute when I invite you to speak. Please indicate if you wish to speak by using the chat facility on Zoom by typing MIS, may I speak, and I will call you to speak in turn. Councillor Furs has just arrived, so if you'd like to confirm your presence, Councillor Furs. Oh, no, you're on mute, Andy.
Thank you. Sorry, I thought I'd just lost you. I've just finished another meeting, so apologies.
Good to have you with us. Thank you very much. Should the committee need to take a vote, I will read out each member's name in alphabetical order. Each member should then clearly state for, against or abstain. This will enable the Democratic Services Officer to accurately record the vote and will also ensure that decision taking is clear to the public who are viewing on YouTube. Does anyone have any questions? And I notice we've got Councillor Lucy Hodge with us now. Good. Excellent. Are you muted, Lucy, or are you there? Oh, no. Actually, we can't hear you, Lucy, for some reason.
Can you hear me now?
Yes, got you. Yes, excellent. Thank you. So apologies for absence. Are there any apologies for absence?
No, I haven't received anybody. I think that everybody's here.
Excellent. Thank you. And declarations of interest. Has anybody got a declaration of interest? Either type in the chat or wave. Urgent business agreed by the chair. We're on item 4, urgent business agreed by the chair. I haven't been notified of any, so we'll move through. Item 5 is items for the public to receive deputation statements, petitions or questions. There are none that I'm aware of. Is that correct? Yeah. So item 6 is items from councillors and co-opted members. I'm not aware of any of those either at this stage. Would anybody like to raise anything as a councillor or co-opted member? No. Lovely. So item 7, minutes of the July 30th meeting. Is somebody, these been circulated prior to the meeting, is somebody happy to propose those as a record? Councillor Brian Simmons is waving at me. Thank you very much. And somebody to second? Andy Furs, Councillor Andrew Furs, thank you. Can we just have a wave for everybody in favour of accepting those? Yep, lovely, good, thank you, that's unanimous. So we're on to item 8, which is the first substantive item, which is the governance reports for Council and Open Pension Fund and audited statement of accounts for 2019-20. And I'd like to invite Peter Barber from Grant Thornton to present the report. If you'd like to unmute, Peter.
Thank you, Chair. Can you hear me?
We can.
Great. Okay. So thank you, Chair. The two audit findings reports that form Appendix 1 and 2 of Item 8 of today's agenda set out the main conclusions arising from our statutory audit of firstly the Council, but secondly the Pension Fund. As trailed at previous audit corporate audit committees, the deadline for accounts production and sign-off has been extended by MHCLG for 1920 to reflect the additional challenges for both us and yourselves in undertaking our respective responsibilities post-COVID-19. So to remind members, the deadline for sign-off is the end of November, next Monday, and we do continue to work with officers to try and complete this work by the extended deadline. Before I discuss the main findings from both reports, I just wanted to provide a bit of context in terms of this year's audits and why everything is so last minute. I think it's fair to say that 1920, perhaps an understatement, has been very challenging for both us and you. And this has been in the main down to a combination of COVID-19 and the challenges that presents on both sides of working remotely. But I think it's also reflects us adopting what I consider to be an even more rigorous and in-depth review of your numbers this year. And this has necessitated more audit input from us and more responses to our increased queries from your finance officers. The other observation is that for the first time in 1920, your council accounts have consolidated your wholly owned subsidiary, ADL, into the financial statements, recognising that those activities are now material to the statements as a whole. And once again, this has involved more work from us and from you. And the audit has also not progressed as quickly as we would have hoped due to sickness within our own team. And this has resulted in our work progressing much further into November than we had planned at the outset. So it's probably opportune at this moment, Chair, if I could, just to put on record our thanks to all concerned at the Council for the cooperation and support throughout. We've had some really challenging and robust conversations with officers, but it's all been done in the common interest of getting these accounts signed off by the deadline. And it's been done in a professional manner, and we very much thank you for this. So we do remain committed to the Monday deadline, but that will be dependent on us completing some outstanding work over the next 4 days. Should we not be able to meet the deadline, we will share some examples of narrative with the Council to include alongside the published accounts that will be unaudited, that you will need to get up on your website by Monday, explaining the delay is down to a resource issue on our side. But as I said, the commitment is to meet that Monday deadline. I do have 2 other audit committees today. It's like London buses, so I will need to leave this meeting at 4:15. But I am joined today by Sophie, who will be more than able to respond to any further issues, should there be any, or questions once I've left. I am conscious also that you have 2 reports from us with a significant amount of paperwork to wade through. I make no apologies for the length of our reports. Under auditing standards, I am required to go into some detail on a wide range of areas to ensure that you are fully sighted of the issues arising from our work. But I will endeavour to pick out what's relevant. I won't go through the detail in every report, but with your permission, Chair, just pick out the key issues. So if we start with the audit findings report from the Council, for the Council, that's Appendix 1 of your papers on item 8. Just to remind the committee that my responsibility is twofold. It's an opinion on your financial statements, and it's the value for money conclusion on your arrangements for ensuring economy, efficiency and effectiveness. If I start with the opinion, this is the biggest aspect of our role. Takes about 80% of our time and ultimately looks to gain assurance that your draft accounts presented for audit are materially accurate. If you look at page 25 of this item on the agenda, you'll see that we've set out the materiality for both the Council and the group. It's £6.7 million for the Council, just a bit higher for the group. And when I do sign off the accounts, it will be to this level of accuracy. And the key messages in respect to the audit of the accounts of the Council is that our work to date has not identified any material errors or uncertainties within the primary statements to the draft accounts. We have earlier today been made aware and identified and discussed with officers a disclosure issue regarding to the financial instruments disclosure within your accounts in relation to group loans that is of a material nature. So I will go into a bit more detail about that shortly, but it is only a disclosure issue. So I suppose, given the size and the increased complexity of your statements, it's important to note that there are relatively few issues arising from our audit to date, and that's a credit to the officers who are responsible for producing these accounts. I'm also conscious on page 25 that we did have quite a long list of issues to resolve when this report was issued last week or earlier this week. Pleased to be able to report that good progress has been made on all of those areas, a number of which have now been completed. But our focus on the remaining days will be getting the remainder of the work over the line, and that is predominantly around some further work on property, plant and equipment testing, investment properties, and the group audit. So, subject to the satisfactory completion of that work, it is our intention at the moment to issue an unqualified, clean opinion on the financial statements on Monday. And I suppose the rest of this presentation needs to be taken in that wider context and overarching conclusion. It does provide you, as those charged with governance, with confidence that the council does have appropriate arrangements in place for producing complete and accurate and timely accounts. So just in terms of the key issues that I wanted to draw out in a bit more detail, perhaps if I start with investment properties, Baines, I think probably unlike many other councils of a similar size, does have a very large and value investment property portfolio recorded at the top of its balance sheet. Now, one of the impacts of COVID-19 on the financial statements, as set out on page 28 of our report, of your papers, is the proposed emphasis and matter that we will be issuing within our audit report in relation to investment properties. This emphasis and matter really draws the reader's attention, of my opinion, to the acknowledgement within your own financial statements that there is a greater increased material uncertainty over the carrying value of your investment properties at year end. It's important to say that it's not a qualification to our opinion. What we're not saying, and what you're not saying, is that the investment properties that total about 310 million are incorrectly disclosed or wrong. It is just explicitly referencing that there is a greater degree of material uncertainty this year. And this emphasis and matter is something that we would expect to see across all our local government clients this year that have material investment properties. It recognises that valuers recognise the uncertainty and are reflecting this in their valuation reports, and we concur with this. The other big area of focus this year has been property, plant and equipment. This also represents a very large figure at the top of your balance sheet. So I think it runs to just over £227 million. And as with investment properties, COVID-19 has impacted on the carrying value of the land and buildings holdings within your property, plant and equipment figure. So page 29 of our report, or your papers, highlights a similar proposed emphasis and matter in relation to the land and buildings figure, and once again it acknowledges the disclosure in your own financial statements of that material uncertainty. And this is something we are absolutely seeing across all our local government clients this year again. So it is absolutely not something Baines specific. It is relevant to the whole sector. Those two areas have taken up a significant part of our audit time, and as I said, the challenges have been increased again this year, and in particular the one bit of work that we are still not quite there on is having heard back from your valuer, is just checking for all the assets we've picked out the robustness of the information and assumptions used by your valuer to arrive at those values, and that is the work that's ongoing over the next few days. Pension liabilities is another area of focus. So this is set out on page 30. Just as you have large assets at the top of your balance sheet, you have a large net liability at the bottom of your balance sheet in relation to your net pensions liability. The pension fund audit that I will talk about in a minute, the pension fund accounts disclosed a material valuation uncertainty in respect to the property funds that they hold within their investments due to COVID-19, and given the material valuation uncertainty within those accounts, We've challenged the council as to why there isn't a similar one in relation to your pension liabilities. The council has revisited this and concluded that there is a need for a disclosure. So this has been added to the revised version of the accounts. We concur with this view. And once again, this is something that we're seeing across a large number of our local government audits this year. I touched earlier on group accounts and the consolidation of your wholly owned subsidiary, ADL, in your accounts for the first time this year. Work is in progress at the moment. We've had recent meetings with the group, with the ADL auditors to understand the consolidation. Interestingly, earlier today, have picked up a disclosure omission that I trailed earlier. So this is in relation to the group loans. So the council has lent ADL approximately £15 million. That should be disclosed within the financial instruments note within your accounts. It's not in there, but we have agreed this morning with officers that that will be added to ensure full compliance with the requirements for financial instrument disclosures in accordance with the code. So that's one additional change over and above those reported in our findings report. And then I suppose the only other area I wanted to go into a little bit of detail about in relation to the council is in relation to going concern. So this is on page 39 and 40 of your papers. This is whether it is appropriate to bridge your accounts on the going concern assumption. And our view here is that despite COVID-19, we concur with management's view that you are a going concern with no material uncertainties. Later on, I will, as part of my value for money conclusion summary, talk in a bit more detail about the financial health of the council. But going concern is predominantly focused on financial liquidity in the short term. It's all about the ability of the council to meet its liabilities that fall due in the 12-month period following the adoption of the accounts, i.e. through to the end of November 2021. And you have demonstrated, and we concur, that you have sufficient access to cash to be able to meet those responsibilities. So in such a large set of accounts, only a small number of adjustments that have been made in the revised accounts you have in front of you, and those are set out in more detail in Appendix C of our report. That then takes me forward to the second area of responsibility, the value for money conclusion. And the value for money conclusion covers three criteria: sustainable resource deployment, informed decision making, and partnership working. And we do this on an exception risk-based basis. And the focus of our work this year has been on your financial sustainability, and in particular, your medium-term financial strategy. But what we've also done is look back at how you've performed financially in terms of 1920. So the findings are summarised on pages 45 onwards to our report. So I'm just going to talk you through, if I may, the key findings there in relation to value for money. Just going to go through to the right page. Bear with me. So on page 45, you'll see that I reference your outturn position for 1920. You set a budget of 113 million, and that was predicated on the delivery of just under £9 million of savings. And importantly, the 1920 budget did include some additional funding both for children's and adults, the key demand-led services that have been under pressure in previous years. We recognise that as a council, you do have a good track record of delivering your financial targets, and it was pleasing to see that despite the challenges in 1920, you did report in your outturn report £120,000 underspend against the revised budget of 107.8 million. And it is interesting that your revised budget was considerably lower than your original budget that was set at the February meeting of full council. And that really was due to the fact that you got about £4.6 million of COVID monies right towards the end of 1920 that wasn't ring fenced, and also that you were able to transfer just over £2 million pounds out of contingency budgets held for children's services in relation to SEND. So that was additional monies that you were able to free up right towards the end of the year, and boost your reserves at the end of 1920. And having accounted for them, you still recorded a £120,000 underspend. There were variances within that underspend. So, there were financial pressures under the commercial estate and children's services. The commercial estate recorded a shortfall of about £800,000, and that was really down to the slowing down of the retail income and challenges in new acquisitions to generate new income. And children's services, again, £2.2 million overspend, really down in the main to placement increases, particularly those with highest need. And that is something we're seeing across the country, children's services under huge pressure. It was pleasing to see that adult services and other demand-led services remained in budget again, despite ongoing cost and demand pressures. But importantly, that overspend in children's and the reduction in income on your commercial estate was more than offset by additional savings in other directorates, predominantly within the Resources Directorate and the reduced capital financing costs. So on to page 46, we are very interested in delivery of savings. They become harder each year, and your 1920 budget had 8.9 million, of which 35% were identified as high risk when the budget was set, and you did put to one side a £2 million contingency to reflect this. So you did outturn a £6.8 million of savings, 76% of the target. So the difference was almost that contingency of 2 million. There were some slippage areas in areas such as contract management, but we did note that modern libraries, for example, was well managed, but others, things like there was like savings in there. That a couple of the areas we looked at, there were examples where you'd done well, but the training one was an interesting one where you sought to centralise your training. But then the savings you were hoping to make in that area weren't realised, because you realised that by centralising it, there wouldn't be sufficient funds to meet your mandatory training requirements across the council. So there is variable effectiveness of delivery of services, of savings, and we're making the observation here, as we do, if I'm honest, across many councils, that continued efforts are required to ensure that annual savings plans are realistic, closely monitored and delivered. So you do have a good track record of delivering, and we recognise that becomes harder every year with continued austerity and reductions in central government funding. And on page 46, we also reference the reserves and balances, and we consider these to be adequate. Just under £30 million of general fund balances, which is consistent with what we see elsewhere of similar councils, and consistent with the range that you are aiming for. Your earmark reserves are just under 50 million, quite a sizable increase over the last 12 months, mainly driven by that COVID monies and the SEND contingency that I referred to earlier. But we do conclude that those are of a healthy level, but we do recognise that they will be under increasing pressures going forward. So that does take me forward to the current year, 2021. It was interesting to see that your budget was increased again to reflect, in the main, the increased budgets going into children's and adults. The budget going up by over 10% when compared with the previous years, and that's good to see given the overspend recorded in 1920. Importantly for us, the budget was predicated on a much lower level of savings, which gave us more confidence that was deliverable. But then obviously COVID came along and to a certain extent made that difficult in terms of continuing to deliver those. We are conscious that in the early days of the COVID outbreak, there was lots of uncertainty about funding, and recognising the council is heavily relying on income generation. Cost pressures, in excess of £42 million being quoted in the early part of the year. And in response to that, the Cabinet July meeting approving 20 million plus of cost savings to address those concerns. Inevitably, clarity emerged during the year on the level of support from government, and that helped the position And, I think we're now pretty clear that, in terms of loss of income, sales, fees and charges, generally, you're probably looking at about 2/3 of the loss being recovered via additional funding from central government. That's enabled you to revisit those savings plans that were approved by July Cabinet. So some are still going ahead, like Heritage Services, but there were some pretty drastic proposals in there, including, £2.8 million of salary savings to be achieved through vacancies and reduced hours. And obviously, you were able to remove those from the savings once there was further clarity on the funding available. So just to conclude then, a bit of discussion there on the medium-term financial plan on the bottom of page 47. It's hard to plan into the medium term with all the uncertainty. So you do have a very up-to-date plan, that medium-term financial strategy approved last month, 5-year period, but it does really focus on 22 and 23. Lots of challenges and some quite significant gaps in there. Use of reserves are an option, but clearly they to fill the gap, but they are absolutely not a long-term solution. But that is the same with most councils. So what we've been able to conclude on page 48 really is that the 1920 budget was well managed. We think you've got reasonable level of reserves given the circumstances and COVID, but we recognise that there are significant challenges ahead. We know that you understand the inherent risk there, and continued close in-year monitoring and corrective action is required to ensure budgets are delivered. So, Chair, I'm conscious I've gone on at some length there, but that is a canter through the key findings. I will stop there, take a breath, and I'm happy to take any questions on the council report.
Thank you very much, Peter. It's very a whistle-stop tour through your report. Thank you very much. So have people got questions from members for the auditor? Please indicate in the chat or just wave at me if you Councillor Furze.
Thank you, Chair. Quick one, Peter. You made a statement in the letter, I forget which letter it is now, about fraud, yeah? And in the news generally, there has been this, the government noticed there was all this fraud that was prevented for the COVID. I'm talking about the COVID money. So there's the normal background surveillance on fraud internal to the council, etc. Yeah, which is, year on year something that we need to be on top of. But when we look at this particular last few months and the COVID money that's come through the door, I'm wondering whether through any of your audits you've noticed any either additional surveillance, and I don't know whether Andy wants to jump in here, or Andy Cox, or whether we've got sufficient handle on the government money that went through the council's coffers to help with the COVID grants and support and all of those things. I just wondered if we could have a view from Peter there, Mark, if that was appropriate.
Okay, happy to do that, Councillor. So I'm conscious that the monies you're referring to predominantly affect 2021 were paid out sort of April, May time, and there was a recognition that councils were under enormous pressure to get it out in a timely manner, and it's a really difficult balancing act, striking the balance between ensuring proper controls were in place to ensure that only the right people get it versus getting it out in a timely manner. Some have got it out quicker than others, and there have been references in the press to lots of fraud prevented, potential fraud, but also potentially lots of fraud out there. And there are a number of organisations receiving letters at the moment from lots of councils and lots of central government bodies about, confirming and clarifying entitlement. Now, we have not looked at that as part of the 1920 audit, recognising it relates to 2021. No doubt when we come to do the 2021 audit, we will be looking to understand that you've properly captured the monies you've received from central government and how they've been spent. And clearly it is for the council to ensure appropriate controls are in place to ensure it only goes to the right people. And no doubt work will continue to ensure that you are comfortable the right businesses have received the right amount, and if there is any concerns, that those will be followed up.
Thank you, Chair.
Thanks, John Barker. Sorry, you've got a question, haven't you? You're still on mute, John.
Trying to
Yeah,
unmute.
you're there. You're there. We can hear you.
Yeah, okay, thank you. Yeah, actually, I was going to explore the COVID fraud potential. Obviously, there's been a lot of publicity, but I think Peter, you've answered that.
John, you're cutting in and out. Can you lean forward so that you're towards your microphone?
Is that better?
That is better. Yeah.
I think Peter's given the answer that I was hoping for. But I just wanted to clarify the comment you made about medium-term financial strategy, the level of reserves, and so on. Clearly, that was approved in October, probably on the best information. But obviously, since October, and particularly yesterday with the spending review announcements, there were a number of assumptions which could impact on the valid assumptions that were agreed in October. Is that something which you feel you would want to revisit as part of an early part of your audit planning for next year, if there were significant variations from the assumptions that were approved for the medium-term planning, in particular the impact of the pay pause for the public sector, but also the Chancellor's commentary, and also the press commentary, media commentary this morning about the start of what is going to be the worst economic recession for over 300 years. Clearly, there's a bit of speculation there, but it could have a significant impact across many parts of the public sector.
Okay, Councillor Barker, I think I heard most of that, and I think it was, from what I heard, it was in relation to the MTFS and the updated information from government and how that impacts on the assumptions. So a medium-term financial strategy can only be based on the information available and known at a point in time. And in terms of how often that should be revisited and updated, I suppose it absolutely depends on the extent to which conditions change. So, you know, if there is significant new information emerging from the Chancellor's announcement yesterday that is likely to materially impact on the strategy, I would expect it to be revisited. You know, you cannot be updating these things on a constant basis because you just don't have the capacity to do that. But the expectation would be when material changes are likely as a result of changing intelligence or understanding of funding, then absolutely I would expect it to be revisited, recognising that enables you, members, decision makers, to make decisions based on complete and accurate information in terms of, you know, income generation, cost cutting, all those sorts of things. So it's October, we're now only in November, but I don't think there's any hard and fast rule about how often it should be revisited. If there is a view of officers that the recent announcements do change fundamentally some of the assumptions, then I would expect it to be updated accordingly.
Okay, all right, thank you.
Thanks. I've got Councillor Hodgson and Councillor Blackburn. So Lucy, do you want to go next?
Yes, thank you, Chair. I just had two really minor points on detail. I just wanted to clarify, just so that I understand the report going forward, actually, and also I just wanted to note here, I'm sure everyone else noted it, how well the council did in getting out its draft statement of accounts 8 weeks earlier than the revised deadline, which seems quite a good achievement to me. But the 2 points are relating to page 19, and one I just flagged up because it had an amber by it. I just wanted to understand the city regional deal and what it means. What's the application of IPSAS 23 mean in relation to that? And also the PWLB loans. What's it mean that the statement about assessed as level 2 in relation to the reporting standards 13 hierarchy? Just really to because again, that was work in progress, to understand the implications of that. Thank you. Page 19 of the report.
Okay, I'm just looking to see if I'm just looking to see if Sophie's still on the line. I'm not sure she is at the moment, is she? Because she would have been best placed. Oh, you are there,
Thank you.
Sophie.
Yep.
Sorry, Sophie. I was trying to read all the names. Are you in a position to help, Councillor Hodge?
I can comment on the city region deal point. So this was a critical judgment that the council had put into the accounts under the critical estimation judgments note. However, the amounts aren't actually material. They're fairly small in the context of the council's accounting. And so as a result, we thought this, potentially could not be a critical judgment, and the council agreed with this, and they've removed the judgment. So the amber rating isn't over the city region deal itself; it's just around the disclosure.
Okay, that's fine, thank you. And just what does it for PB? The PWLB loans. What's 13 hierarchy? Do you know what that means? Level 2 of the. Don't worry if you don't. I just want to know what it means.
No, absolutely. I can answer that as well. So the council are required to put their financial instruments in hierarchy. Level 3 is when you've got significant unobservable. Sorry, level 2 is when you have significant unobservable inputs, and level 3 is when they are entirely based on unobservable inputs. So in other words, there's nothing to base that assessment on except the council's own assessment. So the council are required to make an assessment over that hierarchy. Our work on that is still in progress, so it's just marked as to be confirmed. We just need to revisit that hierarchy and make sure that the council have provided us with evidence to support why they've put it in as level 2.
Okay, lovely. Thank you very much.
Thank you.
Okay, just conscious that we've only got Peter for another 10 minutes and we've got the pension fund to get through. Could Colin, are you okay to is it a quick one, or do you feel it's going to need a long answer?
Doesn't need a long answer. It's just an observation as much as anything else. Thank you, Chair. It was just in relation to group accounts now, Peter. We've obviously got ADL, and partly in light of the disclosure omission of 15 million coming in of group loans at this late stage. On our briefing a couple of days ago, we were made aware, obviously, the ADL group accounts, and it's how much you don't double submit or you remove some of the disclosure information in there. But when we as a council appear to be buying assets off ourselves by buying apartments created by ADL, is that something that has a concern for you, that we need to get our arms around the relationship of ADL to the main council and how that affects us in auditing it going forward?
So once again, Sophie might have some views on this. I mean, my observation would be that the consolidation process is absolutely designed within your accounts to avoid any double counting. That's the whole purpose of the consolidation process, that it strips that out, and clearly that is one area that we are continuing to work on. The accounts for ADL have been audited, and we've been communicating with the auditors and have access to the work that they've done and their findings, and clearly that is used to inform our assessment of how materially accurate you have consolidated those into your group accounts. Sophie, did you have anything else to add to that at this stage?
Not at this stage, Pete, really just to add that our work on this area is still in progress. So just to note that we are still assessing the consolidation. So that's why we're unable to conclude on that at this point in time.
Okay, thank you.
Okay.
I think we should move on, Peter, before you go to the pension fund report, and then we can come back if we need to.
Yeah, thank you, Chair, and apologies, I do have to go. Conscious that we could have had no doubt more questions. I'll just be very quick on the pension fund, and it starts on page 63 of your papers. Just to remind you that the responsibility there is limited to the opinion, and our report follows a similar format to the County Council. You'll see on page 67 that there's a slightly higher materiality for the pension fund, 44 million, which is 1% of your investments total. It's a very big pension fund, 4.4 billion pounds worth of assets, and obviously a lot of our focus is on getting assurance over those investments. So the work is now almost complete there. We're much further progressed on the pension fund, and the only thing that's outstanding is our final checks on the final revised set of accounts that we've just received. And the important finding here is that our work has not identified any material errors or uncertainties in the draft accounts presented to audit. Our work, as I said, is focused on the investments, and we have increased again our audit procedures in relation to the level 2 and 3 investments in particular, which are the harder to value ones, and the ones that are subject to a higher degree of estimation uncertainty. For the first time this year, this has included us undertaking more detailed testing on the derivatives, furthers and futures, and it involved us engaging our own auditor's valuation expert to provide assurances over those numbers. Inevitably, given the large sums involved, a small number of errors have been identified, and they've been set out in Appendix C on page 80. I think there's £6.8 million of errors that were corrected in the revised accounts, and there was a further £2.4 million of uncorrected errors. But once again, these are very small figures when compared with the headline materiality of 44 million, and therefore do not impact on our opinion. Probably also helpful to bring to your attention on page 73, the disclosure again in the pension fund financial statements regarding the material uncertainty over their holdings of UK property funds. This is a similar material uncertainty as reported in the council accounts in relation to the net pension liabilities. And once again, when we issue the opinion on the pension fund, it will include an emphasis, a matter in our report referencing that material uncertainty, and is once again consistent with our pension fund findings elsewhere. And I suppose the only other observation is just to put on record, again, the excellent cooperation and support that we received from the pension fund finance officers over what has been a very long and involved audit process. So I'll stop there again, Chair, and happy to go back and take any questions on the council or the pension fund for the remaining 3 minutes.
Apologies, I just had a house phone going off. Good. Has anybody got any further questions on either the accounts or the pension fund for Peter before he leaves? I can't see anybody raising anything, I don't think. Wave at me if you feel. Peter, have you got? Yeah.
Chair, just if I can, just very briefly, I understand that the committee will have had sight of other inquiries of management documents, possibly at a pre-meet, and I just wondered if the committee will be comfortable in confirming that they've had sight of those inquiries of management that cover things like fraud, legality, going concerning, and just whether you could confirm formally in the minutes that you are comfortable with responses and there's nothing else that you need to bring to our attention. There's just one more thing we need to get done before we sign off, hopefully on Monday.
Yeah, we have had sight of those as a committee. I don't know if anybody's got any concerns they want to raise with those. It does seem to be a slightly odd thing to ask, in that the only way we can check whether the answer is correct is to ask the officers that wrote them, which is they're evidently going to say yes, they're correct and full answers. I'd be interested. I'm sure we won't do this, but I'd be interested to know what you would do if we said we weren't happy. I mean, what action would you have to take then?
In a normal year, this would have come much earlier in the process, but because of the timing of everything, the idea is that management responds. It's then shared with you as those charged with governance to see if you've got any further comments or observations, and we would use the response from management and any further or additional observations that were made by this committee to inform our approach. Given the timelines we've been working to and some of the committees and virtual committees, this is very late in the day. So if you had said something out of the blue that we weren't cited on, the potential is we would have had to consider it as part of our closing procedures. But clearly, what we would be looking to do going forward is ensure that we revert back to the normal timetable for this.
Sure. Okay. Thank you. I'm happy. Could I just have a show of hands? I mean, we did discuss this previously, but I think are we comfortable to say that we're happy to note that report, and we're good. Thank you. Everybody seems that's unanimous. So yes, we're happy to minute that.
Thank you, Chair. In which case,
Yes, and thank you for your time. It's 4:15.
With your permission, thank you, Chair, and thanks all for your time.
Yeah, okay, thank you.
Thank you.
Good, okay. So we officially, at this point, and unless anybody's got any questions that they want to ask, perhaps of Sophie or officers around the governance report, we've officially got opportunity for debate on that. So I don't know whether anybody wants to make any comment or raise anything for discussion between us. Anybody got anything they wish to raise on the statement of accounts? Or Jeff would like to raise something, and then Councillor Hodge. So Jeff, would you like to raise your point? And Councillor Simmons is waving as well. Okay.
Yeah, it was just a short point about the paper that was issued just before the meeting started. I don't know whether Sophie just wanted to kind of talk to that. There was an additional external audit findings report, and I think she just wanted to make some comments about that, just to make sure the committee were aware in terms of its meaning, to kind of help everyone's understanding. So if you just add a few comments, Sophie, I think that'd just be helpful for the committee.
Thanks, Jeff.
That was the supplementary report, which I think Pete has covered that. That was the £15 million disclosure issue that Pete mentioned in relation to financial instruments, which won't be within the audit findings report that you had in the report pack. So it just added that as a single line, in effect, to report that to you as a committee.
Okay, thank you. Is everybody comfortable with that? Yeah, not seeing anybody. Councillor Hodge, you would like to raise something?
There are just a couple of questions for, I'm not sure, the officer relating to the statement of accounts. Is that appropriate at this stage? Or
I'm sure we can, yeah.
Okay, and it was just the increase in reserves for 2019 to 20, increase in about almost 10 million, and I was just really asking how we achieved that from the we had the budget underspend, but the compared to the 18-19 accounts, we've got a 20 million 10 million increase in the earmark reserves, the general fund plus the capital receipts reserves of 9.8 million. And I also wanted to ask about the collection fund. When you compare it to the business rates, in 18-19, the accounts, we were in a favourable position with a 1 million surplus with the business rates. But by March 2020, there's a deficit of 300,000. Was that already due to COVID? I mean, it seems quite early to the COVID impact on those business rates figures. So that was from the collection fund accounting table.
Okay.
Those two questions, really.
Yeah. Okay. I don't know. Is that
too specific?
Gary, is that okay? Yeah.
Yeah.
Thank you, Gary. If you want to take that.
Yeah. Thanks, Chair. Thanks, Councillor Hodge, for the question. So, in terms of reserves, the first thing, Peter Barber did touch on that. The main element of the increase in reserve was due to the first tranche of the COVID financial impacts grant being received from government late in March. So that was paid through to the council late in March, 4.5 million. Yeah. And due to the accounting, we have to transfer that through reserves so we can then carry it forward to next year to apply against the pressures. So that was the biggest element, the increased reserves. There was also a £2.3 million SEND contingency budget we were holding in light of the potential need for the council's general fund to fund these pressures. But as the year emerged, the DFE clarified that those costs couldn't be funded through the general fund and had to be ring-fenced against the dedicated schools grant. So at the end of the year, we were able to release that 2.3 million into reserves. So there was a number of other kind of smaller transactions, and that also includes capital grants unapplied in the usable grants. So that kind of gets you closer to the 10 million.
Okay.
Okay. On the second question to do with collection fund, that isn't COVID related, that late impact. That was to do with the council makes a forecast of what the position's going to be at the end of the year. And that was the difference between what we were forecasting and the actual. And I think that was due to some valuation office changes to rateable values that happened in the last quarter of the year that kind of moved to that adverse change at the end of the year.
Okay, thank you. That's great.
Thanks, Gary. Okay, I think I had Brian next.
Yeah, I want to just thank the officers for all the work they've done to actually get to this stage. Even though we've had COVID, they've still managed to meet the deadlines to 85%. And that ought to be recorded. Thank you.
Absolutely. Yeah, I was going to say at the end that we needed to thank all the officers for their hard work, because it's been an extremely difficult year, and to get the accounts into the state that they're in at this stage is fantastic work. And evidently the auditors have been under pressure as well, and I'm sure that's not been easy. So yes, I'm very happy to record all of our thanks to the officers for their work on achieving the accounts this year. Gary, you asked to speak separately. Is that on a separate issue? Was that to respond?
It was on a separate issue. It's more a point of order, just to highlight to members in kind of light of Peter Barber's and the fact that the audit is continuing. We have circulated some amended recommendations just to cover.
I was going to state those. Yeah.
It was just to highlight that there is some amended recommendations just to kind of change that the audit committee is approving the accounts, but subject to finalisation. But I'll leave that.
Yeah, no, that's fine. I'll cover that. Yeah, thank you for raising it. I will make sure that we're all clear what we're actually saying before we say it, if you see what I mean. Has anybody got anything else that they'd like to raise, discuss, question? No, I am not seeing anything in that case. So yes, to be clear, as it was circulated just before the meeting, but only just before, because the audit is still ongoing. Actually, I will share my screen and put this up just to make sure that everybody is clear. So we are being asked to, sorry, this is the wrong document. We are being asked to agree that the issues contained in the audit finding report for the Council and the Avon Pension Fund are noted, but that the audit statement of accounts, including the letters of representation for both Bath and North East Somerset Council and the Avon Pension Fund in 1920 are approved, subject to any amendments necessary upon the quantification of the impact of any issues arising from ongoing work by the external auditors. And the chair of the audit committee and the chief finance officer make arrangements to sign the statement of accounts for 1920 as representing a true and fair view of the financial position as at 31st of March 2020, following any amendments necessary upon the quantification of the impact of any issues arising from ongoing work by the external auditors. So is everybody comfortable that we're changing what we're being asked to, we're changing what we're being asked to note here?
Yes, agreed.
Yeah.
Oh yeah, Mark, I'm happy with that, but I'd just like to say, so if there was anything of any concern to yourself before signing off, would you?
I will
how does the committee?
I'm completely happy to come back to agree to come back to the committee if there's anything that is raised in between now and Monday when they're hoping to finish the accounts.
Yeah,
rather. If there's anything raised, I will come round to the committee on email and raise anything that appears to be of concern.
Yeah, thanks, Mark. Because I think that you're quite right. There's probably two things there. One is that if there's anything to note, just so that we're aware, and as a committee that we are sort of all together on it. And the other one is any level of information that probably then needs us to feed back to you. So there's probably two levels there. One for us just to be aware of, and the other one to feed back on.
Yeah, sure. Yeah. Happy to do that.
From the action.
Thanks, Chair.
Yes.
Councillor Simmons.
Sorry, I couldn't get the screen off. What would happen if we do not sign them off on the 30th?
I'm sure one of the officers can answer that. My understanding from what Peter Barber said was that we would then need to put a statement on our website saying that the accounts were still under audit, or I can't remember. Are any of the officers able to clarify that? Gary, you're unmuting there.
Yeah, I think it's one that Sophie could also come in from Grant Thornton, but as I understand it, we would have to put a note on our website that the audit was not concluded, and the reasons from that, which would have to be supplied by Grant Thornton, but Sophie may be able to answer that one from Grant Thornton's point of view.
Sophie?
Thank you, Chair. So that is correct. So as Pete said, there would need to be a notice published on the council's website. So the requirement in terms of the 30th of November is for the council to approve the accounts before that date or on that date. So as the council has done so, they fulfilled their requirements on that side. So yeah, as Pete said, there would need to be a notice published, and I think we could provide some wording for that.
Okay, thank you. But to be clear, we are aiming to finish by Monday at the moment. I believe that's possible.
That's the intention. I certainly believe it is possible.
Good. Okay, thank you. So that said, are we then, sorry, just let me find my place in the notes. So are we then happy to, as agreed by the revised recommendations, are we happy to agree that the statement that I've just displayed to you, if again, do we have to have that proposed and seconded formally, or are we? I think we can do so. Brian, you're happy to propose? Is that right? Yeah, good. Somebody happy to second? Councillor Blackburn, thank you. Given that it's on the audit statement, I think we ought to go around and actually do a named vote for that. So can I just have a yes, no, or abstain, please, from Councillor Blackburn?
Yes.
And myself, I'm going around in alphabetical order. Myself, yes. And Councillor Furs?
Yes, happy.
Councillor Hodge?
Yes, agreed. Thank you.
And Councillor Simmons?
4.
Yeah, good, thank you. So that is that item closed. And we move on to item 9, which is the Treasury Management Report. It's pages 235 to 252 of the associated pack, if you're following it in there. And invite Gary Adams and Jamie Whittard to present the report, please.
Thank you, Chair. So this report is an update on our Treasury management activities for the first 6 months of the year. Members have probably already seen this because due to the timetabling of meetings, this report has already been taken to both Cabinet and Council earlier in November, as this is the requirement on the Treasury Management Code of Practice. But I'll quickly kind of run through some of the kind of key headlines and then happy to take questions on it. looking through the report, firstly on the investment performance for the first 6 months, our investment portfolio at the end of September stood at £67 million. And in terms of interest earned on that balances, the average rate was just over 0.5%. That was above the benchmark rate, which was 0, given the kind of low short-term rates on it. I think I mentioned this last time we bought a report on the outturn from last year. The overachievement is mainly due to our 5 million long-term investment in the CCLA property fund, which is a long-term investment, which was achieving over the first 6 months about 3.43% return. All the rest of our investments are very short-term in nature, kind of earning low rates. On borrowing, in light of COVID, we did take out £15 million of borrowing on the 1st of April. That was mainly just to ensure that the council did have sufficient liquidity during those uncertain times where we were unsure of government support against the costs and pressure on our income streams from COVID. So it was a kind of proactive approach to undertake borrowing, and there was concerns about liquidity in the overall markets as people tightened up given the concerns over the economic forecast. We haven't taken out any borrowing since then, and as you'll be aware, that we've had significant kind of inflows in our cash flow from all the government grants that they have been passing to councils, both to administer and payments for businesses, but also to support our costs in reacting to the pandemic. In terms of other things, the economic outlook, I think Arlene Close's is included in the report, mainly focusing on the well-documented impacts on the economy going forward from the pandemic, both worldwide and the UK, and their forecast for interest rates to remain at their low level for the medium term now. So their central forecast is for base rate to remain at 0.1% up until the end of 2023. And there's more downside risk they're highlighting than upside risk in that figure. So I think we're kind of aware that lower interest rates will be the norm for the foreseeable future there. The other thing I was just going to mention, the report does mention the PWRB consultation. So this has been around for a while and we were awaiting response. So the PWRB, as part of the spending review announcement yesterday, the government did announce that they will no longer kind of lend to local authorities that plan to buy commercial assets primarily for yield. And it is for the Section 151 officer to kind of confirm their spending plans on that. And as a result of kind of those changes, they did revert the PWRB rates as of today. They took the 1% premium they added, they've removed that. So that's a kind of live thing. We still need to kind of run through the guidance with our Treasury advisors on that, but just to make the committee aware of that change. I think I'll leave it there and just open to questions before the chair moves the recommendations.
Okay, thank you. Anybody got any questions? Please put them in the chat or wave at me. John Barker. Yeah.
Thanks, Chair. Thanks, Gary. That's an interesting summary. You mentioned the current low level of interest rates. There's been quite a lot of speculation about the potential for negative interest rate territory. How could that impact on your factoring in of forward assumptions?
It's a good question. Yeah, we haven't seen negative interest rates yet, but I know the Bank of England has been undertaking consultation with the kind of financial services industry to see, could their systems cope with negative interest rates, and before they potentially move there. Currently, we're not aware that that will be brought in. Obviously, if it was and we weren't able to place investments, if they were a negative interest rate, that would impact on the return we would be getting, and we'd have to factor that into our forward budgets and projections of interest earned.
In fact, it could create an additional cost, couldn't it, for potential holdings of cash balances, for example. If that scenario should emerge, would you be able to repay some of the longer term debt which is currently part of the borrowing portfolio, or are we in genuinely uncharted territory? I was looking at the schedule in Appendix 4, and there are still some relatively high rate interest PWLB loans, for example. If negative interest rates were indicated for a long period, could that provide an opportunity to repay all or part of some of those loans, or would that jeopardise cash flow?
I think you almost need to see the long-term borrowing as that's what it is. It is a kind of long-term need. Given where interest rates are as well, there would be kind of penalty charges for trying to refinance that on the long-term rate. We do keep an element of short-term borrowing with other local authorities. So we have got the decision to, when they come up for repayment, not to renew that borrowing. So there is an element of flexibility there. And we do currently try and manage our cash to keep investments kind of low. The reason they're high at the moment is due to the COVID extra funding. So we'll continue to try and manage that investment level, with that in mind as well.
Yeah. Okay. No, that's good. As I say, I realise it's partly uncharted territory, but there could be some interesting calculations that you might need to do to maximise any opportunity. So anyway, thank you for that.
Yeah, certainly. Speaking as a person who in my professional life works in banking systems, we've been getting the questions about our systems being able to handle negative rates. It's obviously something that the market and the Bank of England are at least considering. We've got Councillor Hodge next.
Yes, thank you, Gary. I just had a couple of questions about the investment pie charts, and one question was between June and September 20. That time when we were looking at savings, 5 million has gone into investments. Is that again moving monies in that we've received to deal with COVID into there to then come out again? I just wondered how we were in a position to put 5 million in, and also the strategy going forward. Can you just so really there's been quite a change in the profile, moving more into market funds from June 2019 forward now to being 55% with 37 million in there. And is that strategy, how's that strategy going to is that going to continue?
Yeah, so in terms of the 5 million increase, that is purely kind of cash flow. So it's not us saying we're going to make a further investment. It's purely due to kind of the income coming into the council being higher. And yes, it is mainly related to all the government funding for COVID. So both the business support grants and also some of the compensation funding that the council has been getting for the pressures. So that's the main reason there. In terms of money market funds, the increase there is purely because of maintaining liquidity. Money market funds offer next day withdrawal, so it's almost a call account. So it just leaves us with the flexibility that we can access that money should we need it as well. And also we're quite restricted on where we can place our investment money now. We do follow Arlen Close, our Treasury advisors' guidance, and due to kind of concerns, they have reduced the length of investments we can place with other banks to 35 days as well. So that's kind of why we've been using money markets more, for both those reasons.
Okay, thank you. And Councillor Blackburn. You're on mute, Councillor Blackburn.
Sorry, pressing space bar is obviously not working.
Yeah.
Right, sorry, Gary. I was going to ask just regarding the group loans of 15 million that we've now heard about today, that were previously omitted from the information. Where do we access those funds from? Appreciating that we are providing them to ADL with an interest rate, but we are obviously accessing those funds. Where do they particularly come from?
Generally, it depends on our cash flow, whether we can manage those through cash resources, or ultimately we would borrow from the PWLB to finance those loans. Some of them are relatively short term. So, for example, where Aqueous are building the Riverside flats for sale, that there is loan financing while they're going through the construction works, but then there's repayment profiles based on as soon as they sell those flats, they are repaying that loan. So they were kind of over a 2-3 year period, whereas some of the transferred properties that are longer term rental would be a longer term loan. So we would kind of match that to the life of the loan, how we finance that. And I should also, I know it relates to the accounts, in terms of the 15 million disclosure note, we had included those loans in our accounts. It was just on one of the disclosure notes that they weren't in the right table. In the financial instrument notes, they were set out lower down in the note. It's just one table higher above that was omitted from. It was just an oversight in constructing that note. So they take assurance they were in the accounts and they were included.
Yeah, thanks, Gary, for the update. I just going forward, it's just understanding where we're accessing those funds, and it's good to know that we're looking at it on the short term as well.
Yeah, thanks.
Okay, thank you. Has anybody else got any questions? Yes, John.
Gary, thank you. Chair. Gary, you mentioned COVID grant flows a couple of times. Is the central government money coming in as it's been promised? Because I've read that there's been some delays with some authorities, which are causing cash flow problems. But by and large, is the delivery or the promised date the one that's actually delivered to help you in your day-to-day cash management?
Pretty much, yeah. I think, in terms of the business grants, that was paid up front before we kind of had to start paying these grants out. The COVID support tranches has come through in 4 tranches, so that has been almost drip fed through the year. But yeah, we haven't had any real issues with them not paying in line with when they said they would pay with those grants.
And have the levels of application for support been around the levels that you'd expected in your forecasting?
Generally, for the first grant, yeah, I think there was about 2 million out of 46 million that wasn't applied, and that was mainly due to how government calculated which businesses they thought would apply, and due to state aid issues with some of the bigger businesses, they obviously couldn't apply. So yeah, broadly, it's been in line with what we've had to pay out.
Yeah, well, I think we'd all recognise it's a fairly flexible and fast-moving set of circumstances in some occasions, and I'm sure for the next few months it's going to be just as as volatile as it has been in the first part of the year. So well done. Okay, thank you, Chair.
Thanks. Has anybody else got any questions on the Treasury Management Report? No. And has anybody got any comments or anything else they want to say about the Treasury Management Report? Anything they want to raise? Any form of debate? No. In that case, we are asked to note the Treasury Management Report 30th of September 2020 provided in advance according with the SIP for Treasury Code of Practice is noted, and we're asked that the Treasury Management Indicators of 30th September 2020 are noted. Is everybody happy to note that? Would you like to wave a hand at me? Yeah, that's unanimous. Thank you. Good. So we're moving on to, and thank you, Gary and team, for that. That's great. We're moving on to the internal audit plan. Is this Andy Cox or is it Jeff? I think
it's Chair, it's Andy Cox.
Andy, thank you. Hand over to you.
Okay, thank you very much. This report is the internal audit plan 6-month performance update. As you can probably remember, back in July we met and I presented the internal audit plan for 2020-21. We said at the time then that the impact of COVID-19 on the plan, we highlighted that at the time, and we said that we were going to obviously be impacted further by COVID-19 due to the ongoing response to that. The need for the internal audit team to be supportive of senior management and to respond as and when required has resulted in significant unplanned work during the year so far. Give you some ideas of the work that we've done, which is unplanned. We've done support work in terms of small business, retail, hospitality and leisure grants, and also the smaller discretionary grants were offered to businesses as well. We've also been involved with adult care provider relief. One member of my staff at the moment is working 3 days a week on that exercise. Passenger services supplier relief, we also provided advice and assistance in relation to that. And we also provided a review of the PPE stocks, which were being purchased and issued out from the community hub, which was mainly at the pavilion at the time, back in April, May time. So as you can see from the reports, the level of unplanned work has been significant. We're talking around about 151 days of the team's time up to the end of September. That has obviously had big impacts on us in terms of completing planned work. And in fact, there's a need to reset the internal audit plan. And the proposal outlined in the report is to basically reduce by a minimum of 9 audit reviews that won't be carried out. Those will obviously be considered for inclusion in the 21-22 plan. So we just have to see at the time when we're doing our planning exercise for next year, whether those audits will be included in the 2021 plan. The audits that I've mentioned that we're going to drop are in section 3.9.1 of the report. These have been selected really based on looking at the original risk assessments that we carried out, consideration of other ongoing reviews which are closely related. For example, there's a big property review going on at the moment, and also consultation with management about whether they should drop off. As I've said, it should be noted that it's likely that further changes to the plan may have to be considered also based on the ongoing response to COVID-19. In terms of that plan work actually carried out up to the end of September, we have produced draft or final reports for 4 reviews at that time, and had another 8 reviews, either work in progress or very near completion. All audit work is being carried out remotely at the moment. The team aren't in the offices at all. They're all at their homes working remotely. And we've had to adopt, obviously, new ways of working. As you can understand, remote working does have impacts on the efficiency and effectiveness of the team and the work carried out. For example, it could be much more difficult or sometimes impossible to carry out some audit testing that we require to carry out. I think I mentioned to the audit committee back in July that when we were doing the PPE audit review, a colleague actually got walked around the establishment by a mobile phone to actually show him how it was actually operating. So that's a good example of how we've had to try new practices in terms of remote working. Obviously, that limited testing sometimes does have an impact on the assurance that we can provide. And so therefore we've got to be aware of that in terms of remote working. In terms of finalised audit reports and the level of assurance provided, we've always said that we will report back to committee on any weak or poor assurance levels reports produced. The single audit which has recorded a weak assurance level was an audit on contract management review of the IDOCS application, which is an application used by the planning, building control and property teams. And that's used for the processing of applications and the storage of information, basically relating to the ownership of land and property. In terms of that, and the reasons for the weak assurance level was really around adequacy of vendor performance monitoring and verification of compliance with data protection regulations. And this is relating very much to GDPR IDOCS module, were the ones that were actually highlighted as areas brought to the attention of management. IT service management responded very positively to that review, and all 4 of the high risk recommendations have been agreed for implementation. Obviously, we will continue as a week level report. We will carry out the normal follow-up, and as there was these 4 high risk weaknesses, we will actually do follow-up and testing in relation to those and report back to audit committee if necessary. In terms of this report, the committee are being asked to actually just note progress against the 2021 audit plan, and also basically agree the revised plan based on the omission of those 9 audits recorded in section 3.9.1. If there's any questions, I'll be very happy to take those.
Thank you, Andy, and thanks for your and your team's work under difficult circumstances. Has anybody got any questions on the internal audit plan? Anybody got anything? I'll start with that. Just you talked about that, the IDOCS vendor management control being the only weak audit, and that you were going to follow up. Just what are the timescales for the follow up? When are we expecting that to be resolved?
Based on the current work, I think we'll be looking at least Q1 21 before we actually carry that follow up.
Okay.
That links in with the action plan agreed by management.
Okay. Thank you. Anybody got any questions? No? People seem content. And has anybody got any questions about the items that are being dropped? I mean, I guess do you just want to expand a bit, Andy, on how those were selected?
Yeah, so as I said in my preamble, so for example, I've got 2 revenue estate audits in there, one on the property acquisitions and one on the asset utilisation. So I've been liaising with Mandy Bishop very recently in terms of the property review, and we are actually carrying out 1 property audit, well 2 actually at the moment, one on property compliance and another one on service charges and tenancy management. So I'm liaising with Mandy in terms of her property review. So I actually have been discussing that with Mandy and property management as well, and it was agreed it would be wise to actually drop those 2 audits in terms of property acquisition and asset utilisation, because they will be considered during that review. There's others on there which would be lower risk, if we could put, let's say, that in terms of why they're included in the audit plan. But what I tend to do through the audit process is to apply our risk methodology and put those in order. So probably at least 4 or 5 of those are at the bottom of the list.
Sure.
And again, that's why I've kind of drawn the line in terms of resources available.
Okay. And is there, I mean, you're talking about kind of the COVID work pushing these things out, which is absolutely understandable. Do you see a time when you actually catch up on this, or is it just sort of, that's it, we've pushed everything out by that much and that's how it rolls on now?
At the end of the day, our resources are finite, and the unplanned work does replace the planned work that we intended to do. So as I said, we will reconsider that in terms of the 21-22 audit plan, and the basis of the planning we're going to use for that may change as well. We may have to think about a more flexible approach to that, which will obviously raised at the committee later, well, the next financial year now. But yes.
Yeah, I mean, ultimately you're saying, ultimately you're saying that there is only the team there is, and we are talking about some audits just aren't going to happen now.
That's right.
Yeah. Okay. John, question?
I'm muted. No, can you hear me?
No, you're fine.
Yeah, I've switched to my desktop, so I hope the sound is clearer. Andy, a quick question about the fraud or investigations. Peter reported in his earlier session that matters in relation to fraud, that's on page 23 of the other matters for communication and the matters in relation to fraud. The auditor commentary is, we've previously discussed the risk of fraud with your corporate audit committee. We have not been made aware of any incidents in the period. Now, I'm assuming that's the financial year that's been under audit, and no other issues have been identified during the course of our audit procedures. But back in July, you reported 3 incidents or investigations in either in progress or completed. I'm just wondering what sort of dialogue do you have with the external auditor that draws him to make that conclusion?
Well, we do have dialogue with them, and they specifically ask us questions around that in terms of their audit work that they carry out. Is probably around the level of the significance of the issues that we're investigating there, John. Right. So as you know, going back to that July report and presentation, they were fairly low level kind of fraudulent work in terms of that. So in terms of the external auditor, it is probably immaterial.
So I think what you're saying is that there's either an implied or an actual materiality value. If there was a major fraud that you were investigating or involved with or had concluded, then that would be reported more visibly by the external auditor. But smaller scale incidents, okay, that's a matter of clarification, I suppose. So, thank you.
Thank you, John. Has anybody else got any questions for Andy or any comments on the audit plan? No, everybody seems content. That's good. So Brian, was that?
The one that bothers me is GLL Contract Management, Greenwich Leisure Limited. They've got a pretty bad record around the rest of the country. How safe are they operating our leisure centres?
Okay, thank you.
Well, I'm not too sure if that's a question for me at the moment, really, Brian. We have looked at GLL previously in terms of the relationship we had. That was probably 2 years ago. And in terms of the contract management then, it was good in terms of the operation of the contract management. Obviously, GLL and all leisure providers have been heavily impacted by COVID, and it's a moving picture. So it's probably something that we need to consider in terms of reviewing the financial stability of the organisation and looking at financial assessments there. So yes, it's off the list at the moment, but obviously you can have a watching brief on these things. So we will be working with our colleagues in the council in terms of that.
Okay, thank you, Andy. If nobody has anything else, then we are asked to note progress made against the internal audit plan and to agree the revised internal audit plan based on the those items in 3.9.1 being removed from this year's plan. So are we content to note those things? Can I just have a show of hands? Yep, everybody's there. That's unanimous. Thank you. And I think with that, unless anybody wants to tell me otherwise, that concludes our business for this meeting. John is waving his hand. John is waving his hand at me. We're not going to get away that easily. John.
I just remind you, when we had the pre-meeting briefing, I did ask that I wasn't aware that Sean had now retired.
Do apologise. You did mention this.
Nice to see Enfys, but Sean served as the committee for several years and was always very helpful and informative. Could we formally send our belated wishes for a happy retirement to Sean?
Indeed we can, and I'm sure we're all very happy to do that. Thank you. Yeah, apologies, you did mention.
Excellent. That's all right.
Missed it off my list. I apologise.
Thank you.
Thank you, John. With that, I think that I'd just like to thank the officers and the external auditors for their time, and thank everybody attending and watching, and we'll close the meeting. Thank you.